I think that would be a travesty. I know this goes against what he wishes to happen, and this is the first time I've said, all of you have asked me about the schedule, and I've said, look, Chairman Dodd will talk to you about the schedule. That's his prerogative. If senators can pass a bill of this substance out of a committee in a week, a 1,200-page bill full of substance that has a real effect on the financial industry, then the states who elect them might as well send robots to the Senate. Okay? So I hope that people on both sides of the aisle will look at this product and will really debate it in committee and get it right. And I can tell you this, I stand ready. I talked to Mark Warner just a few minutes ago, and obviously we both are disappointed, but because even the language that we're working on, we still have a little work to do. It won't quite get completed in the way that we had hoped. There's some judicial issues we'd like to work through. There's some other issues we'd like to work through. You know, we made a lot of progress on capital issues. One of the things we need to deal with in a bill like this, let's face it, we went way down the road on consumer. By the way, I am surprised, if you want me to be honest, about where many of our Republicans were on consumer. Came way over here in the middle of the road to meet halfway. And what I hope will happen, I think Americans know that, certainly, no doubt, there were Americans in this country that were taken advantage of. No question on mortgages. But I think a lot of people in America, most people in America, realize there were an awful lot of people who borrowed money who had no business borrowing money in the first place. And I hope that what we'll look at in this bill are underwriting standards that at the bottom of the pyramid that created this issue, the bottom of the pyramid, meaning the fact that there were loans made that should have never been made, and there were people who borrowed money that should have never borrowed it, that we will deal with that also, because that is very important as it relates to the stability of our financial system. So with that, I look forward to working with Chairman Dodd, Shelby, Greg, Crapo, Bennett, all the guys on our side, all the guys on the other side. I would do this again. I'm going to get a good night's sleep tonight, and I'm going to dust off. I'm going to wake up in the morning, and I'm going to come back, and I'm going to continue to do what the people of Tennessee elected me to do and gave me a 6-year lease to do, and that is to continue to work with people across the aisle to try to solve our nation's problems. I thank you for letting me talk so long and being so patient. I have no idea what order to take questions, but I'll take it.
Senator, do you think it's possible that Senator Dodd is going to push through this bill on a partisan basis and kind of dare the Republicans to vote against it and go that partisan way? What's your expectation?
I think Chairman Dodd sincerely wants a bipartisan bill. I think he feels under pressure to try to pass a bill out before reconciliation hits the Senate floor.
From the White House?
I don't speak about things that I don't know. I try to talk about but let me say this. I know that the elephant in the room, I know this for a fact, the elephant in the room is reconciliation and trying to get a bill out of committee prior to that time. Look, the fact of the matter is, I think he is a victim. He is a victim of health care policy. Yes, sir.
Senator, what was left in those last 5 years before you reached the goal?
There were some issues relating to risk retention. Obviously the Dodd draft has some areas of risk retention. I think the House passed some risk retention issues, and working through some details. I think many of you probably read a headline this morning about the fact that credit's starting to actually start percolating again, okay? And one of the things we have to be really careful of as we look at risk retention is that we don't have the unintended consequence of shutting down, especially in the commercial market, securitization. And so we were trying to work through some issues there, trying to, in a backhanded way, focus on this issue I mentioned a minute ago, Jim, and that is if you're going to have to retain risk, maybe you don't retain risk. If you are writing a mortgage on a 15% down payment home, maybe you create an incentive for people to actually write mortgages that are the kind that happen in Canada and other places where, by the way, their home ownership is equal to ours and they don't have the defaults that we have. So working through some of those issues, we had some judicial issues we were still working through with Mark and others on resolution. The big piece that was not going to be ready was derivatives with Jed Gregg and Jack Reed. Very bright guys, very complex area. By the way, something we absolutely have to get right. I mean, the devil's in the detail there, very important. We had, there were some member issues that were coming up. Whenever a vehicle is one that is moving, I'll mention one since it's been reported. I'll mention any one you want me to mention, actually, but proxy access was going to be an issue. Okay, I know that Senator Schumer, who I respect and had a very good meeting with, we've actually we've agreed to look at some governance issues that he has put forth. But on proxy access, in fairness, that's kind of a line in the sand. I think that concerns us greatly about activist groups getting involved. There's some work that needs to be done there. But let me say this: no roadblocks. There has not been a single issue yet that we have not been able to work through. I called Tim Geithner this morning and thanked him for the way that Treasury has worked with us to try to give us technical assistance, to talk us through some of these issues. Talked to him yesterday afternoon at 4:30. I want to thank them. They have been tremendous partners, I got to tell you, in trying to resolve the issues that we've had to deal with.
Yes. Senator, 18 months after Lehman Brothers and AIG, sounds like the chances are dimming for any meaningful reform. What kind of message does that send to Wall Street, to consumers?
I still think we're going to get there. Okay, I hope we're going to get there. I think this is an important bill. I think it's full of substance. I mean, let's face it. There are 4 titles in this bill that are very important. Okay, the systemic counsel and having the ability to gather data that you turn into information and actually have some weather warnings, if you will, about what's in. That's an important piece. Okay. Secondly, the absolute knowing that you have an orderly liquidation of large companies, that is important to get back in the American psyche. That's something that Americans, Republicans and Democrats are united behind. And I can tell you in this body, people are united behind. And let me say this, if you're a large company and you fail and you choose not to go through bankruptcy, you are going to go through a very painful liquidation. Okay, and that's what. But third piece, derivatives, very very important piece. Derivatives. Look, think about what happened with derivatives. To have a regime that actually causes people to put collateral up against. You think AIG would have happened had we had an appropriate derivatives regime? And then of course consumer. But I think we're going to get there. I'm disappointed at where we are today, but I am equally energized to continue to work with the Dodd staff, the Shelby staff, and others to get a bill. And I think we will get there, but I think it's going to be far messier. I find that when you are willing to grind out every issue, grind it out. Our staff has been working almost 24/7. That's when you get a good piece of legislation.
Yeah. Derivatives. How far apart are you on the rating agencies? And a question on the last part of your comments before we went to the question and answers. Did I understand you right to suggest the bottom of the pyramid, it seemed to be the CRA issue and what people have said that somehow the Community Reinvestment Act has led to this crisis. The FDIC, the Fed, OCC have all said that is the case. Most lending, subprime lending actually went to white folks who were living at home. So I'm curious what you meant by that.
I didn't say anything about CRA.
That's why I'm asking if that's what you were.
No. So what I'm saying is, and I should be more eloquent, if you look at what's happened in our financial crisis, and you start out with the fact that we had bad mortgages written, right? And then you had easy credit, we had low rates. Whenever you have low rates, I was in the real estate business all my life, the value of real estate inflates. I mean, it's just an inverse relationship that occurs, okay? And so you have that. Then you had the fact that we had a bunch of institutions in this country that were over-leveraged, right? I mean, 30-to-1 leverage, 40-to-1 leverage. And then you had the ability to multiply that with derivatives, right? And just take a notional value, take a base value into a huge notional value, right? But at the bottom of that pyramid, you had mortgages that were underwritten poorly, That's my point. And I didn't mean by